It's Friday, the 1st of October 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael. Do you know, I really love the first day of the month.
Why?
I don't really know. I like watching the month tick over. And for some reason, the first day of the month, it feels like a real achievement having made it through the previous month, and particularly when you're in a month when lockdown's going to end.
And it's also the first day of the new quarter.
So true, and we love that here at Fear and Greed.
We certainly do. And Sean, do you know who else is excited? Treasurer Josh Frydenberg is excited. He's upbeat about the economy and the government gets an $80 billion boost. That is our main story this morning. Also, the local share market has its best day all year. Victoria reports a surge in COVID cases and Foxtel outlines a brave new future. Then stay listening for Sean's chat to Christiane Rader from Cardinia Capital about the stocks to watch as the economy reopens. But first, Sean, as I mentioned, Federal Treasurer Josh Frydenberg yesterday said Australia ended last financial year about $80 billion better off than forecast, primarily because of the big surge in jobs in the first 6 months of 2021. That's good news.
Yes, it definitely is. The budget deficit came in at $134 billion last financial year, and that's after the federal government spent about $311 billion in economic and health support. In short, the economy in 2021 was stronger than the government expected. It paid out less in welfare and received much more in tax receipts. It really matters because it means the starting point for this financial year is much stronger.
So what about this financial year? I know we've only just a few months into it.
Well, yes, the first quarter finished yesterday, and that was a quarter in which Victoria and New South Wales were in lockdown, but things are looking okay. Everyone, the Reserve Bank included, expects the economy contracted in the 3 months to the end of September. And yesterday, Mr. Frydenberg said the bill for the Delta variant outbreak will top $20 billion, and he expects the budget deficit this year to be around $107 billion. But some of the partial indicators are starting to look okay, and certainly investors and market economists are looking forward to a pickup in the economy this quarter, ending at the end of December, and then into 2022. Yesterday, the ASX 200 jumped almost 2%, the best session of the year after the big falls the previous 2 days. What recent trading suggests, amid all the noise and fears about inflation that we've been talking about, investors fundamentally think the economy is on the improve.
Now, Sean, it has been a big week for economists. I am definitely not one of those, so I'm relying on you to take me through some of these figures that have come out through the week.
It has been a big week. Retail trade figures earlier in the week were affected by the lockdowns, but they weren't a disaster like they could have been. Jarden Economics put a note out today. They're saying that they think there's about $200 billion available to consumers when they can start spending again. Now, that's either paid down debt or built up savings. And remember, the end of the lockdowns, at least in New South Wales, have been brought forward. That's good news. ABS job vacancy figures yesterday came out. Now, they're down 10% in the 3 months to August. That's all during lockdown. But they're still 50% or almost 50% above the start of the pandemic. Also, the ABS yesterday said the number of dwellings approved rose by nearly 7% last month. That came after 4 consecutive months of decline. Low interest rates, increased household savings and confidence in the housing market are convincing people to build and renovate in most states. Yep, things are uncertain, but the consensus view among economists is that the Australian economy will bounce back hard in coming weeks as the reopening begins.
You mentioned markets before. What a week we've had. Yesterday was another incredibly volatile day.
That's true, but at least yesterday the market went up. After falling 1.5% on Tuesday and then another 1.1% on Wednesday, the S&P ASX 200 finished up 1.9% yesterday to 7,332 points. It was the best day since November last year. The surge means that the index ended the quarter, the September quarter, up slightly. Now, why is that the case? Well, iron ore prices bounced with Singapore futures trading up 10%. That helped BHP and Rio Tinto. They were both up by more than 3%, while Fortescue Metals was up more than 1%. The banks did well. Westpac, National Australia Bank and ANZ, they all rose by more than 2%, while Commonwealth Bank jumped by 1.7%. Those 6 stocks, BHP, Rio and the 4 banks, are half the top 12 on the index. So if they go up, it's hard for the index not to go up. In fact, all 11 sectors of the benchmark index ended higher yesterday, and about 85% of stocks of the top 200 rose. Away from the ASX, the Aussie dollar is trading around 72.3 US cents, while oil prices are broadly unchanged over the past 24 hours. Gold prices have jumped back a bit, though, towards $1,760 US an ounce.
What about Wall Street? What's happened overnight?
Well, a stopgap spending bill to avoid a government shutdown this week helped Wall Street recover some of its early losses. With a couple of hours of trading left in the session, the Nasdaq was higher and the Dow Jones Industrial Average and S&P 500 were both lower. European markets were mixed overnight, with the Stoxx Europe 600 up a bit and London's FTSE lower.
We'll be back in a moment with the rest of the day's business news, but before we do that, a very quick reminder about our new daily newsletter. You can sign up for it at fearandgreed.com.au. Sean, have you signed up?
Have I signed up? I've signed up 3 times. I've got 3 different email addresses, each one.
Fantastic.
I'm inflating the numbers.
Do what Sean does. Head to fearandgreed.com.au and sign up everybody in your family, everybody in your workplace. We'll be back in a moment. Sean, plenty of stories around this morning. Let's start with COVID. What's the latest? It was a pretty shocking day for Victoria yesterday.
It was. Victoria recorded 1,438 cases yesterday, up more than 500 from the day before, and 5 deaths. Premier Daniel Andrews blamed non-compliance with the lockdown rules, specifically around the AFL Grand Final on Saturday. There were reports last night that dozens of supermarkets across Melbourne could close this weekend because so many staff are affected and in isolation. Coles has 3,000 employees in isolation across Victoria and New South Wales. The supermarket has already reduced hours at some stores. Woolies said that up to 5 of its stores may have to close. In New South Wales, there were 941 cases recorded yesterday and 6 deaths. The number of cases was up a bit, but it's pretty much plateaued in that state. There are a number of cases, though, in regional areas, and several country towns have gone into lockdown. About 87% of the state's population over the age of 15 have now had at least one jab, and nearly 64% have had 2. And in news from that state, which is making me very happy, schools will reopen a week earlier than expected, with a staggered start beginning on October 18.
Yeah, great news for parents in New South Wales. What about, though, away from the 2 big states? What's happening in Queensland and the ACT?
Queensland recorded 6 new local cases yesterday, with a number of regions now going into stage 2 restrictions. The crowd for the National Rugby League Grand Final, which is on Sunday, may have to be reduced to about 75% of capacity, the Premier said yesterday, though it's not quite clear he'll miss out on that. The ACT hit a 90% one-jab milestone yesterday, while 64% of the population is fully inoculated. There were 31 new COVID cases recorded yesterday, and in South Australia, an interstate trucker tested positive. Finally on COVID, with a boost in numbers of Moderna and Pfizer jabs available, all Australians, including those over 60, will now have access to those inoculations from today.
Yeah, it's interesting, Sean. It seems to be that a lot of doctors, surgeries and medical centres seem to be promoting that they've got Pfizer shots available.
Exactly, and the pharmacies around my place are doing the same thing. So obviously supply is no longer a problem.
Yeah. Now, this is an interesting one. Foxtel is far and away Australia's most successful cable channel, but it's never made money and streaming does seem to have overtaken it. Yesterday, though, CEO Patrick Delaney outlined a different future.
He sure did. Foxtel is 65% owned by News Corp, which dominates it. It's always bid hard for sports rights. It's expensive relative to newer streaming services, and it just has a touch of old world about it. Mr. Delaney wants to change that, yesterday saying Foxtel was becoming a digital streaming-led business. He's targeting 5 million subscribers in 3 years' time, and it sounds like he wants to list on the ASX. Now, the company currently has about 3.9 million subscribers. The shift for the group has already begun. Its Kayo streaming service has 1.1 million subscribers. It also has Binge, Foxtel Now, and the just-announced Flash. And sports rights around the world are increasingly going to streaming companies. Nine Entertainment has the rights to rugby in Australia, and its streaming subsidiary, Stan, launched a sports service on the back of it. But it's a very, very competitive market. And Foxtel will be up against Netflix, Amazon Prime, Disney+, Stan, and many more.
Now, I've got all of those, but I've always got room for more. Now, Sean, you ran through the economy earlier on. I know you love credit data, but you didn't mention it. What's going on there? Not with the fact that you didn't mention it, but what's going on with the credit data?
You were kind of right. I wanted to get the credit data in the main story because it's worth it, but I couldn't quite manage to jam it in. Anyway.
Now's your chance. Let's go.
People are accessing credit, no doubt about it, and the figures from the Reserve Bank yesterday show exactly what the regulators are worried about. Credit growth for housing remains really high, though it is down from its June peak. In fact, housing credit in August was more than 6% higher than a year earlier. Remember, this is when almost 50% of the population was in lockdown. It's only a matter of time until regulators use prudential controls to slow down lending growth, and that means making it harder to get a home loan.
Sean, what's making headlines in today's news media?
The Australian this morning is reporting that the Minerals Council of Australia, which represents major resources companies including BHP, Rio Tinto and Whitehaven Coal, has endorsed a net zero by 2050 target. That's significant for that sector. And the Financial Review's annual power list has also been released this morning. For the first time in many years, the Prime Minister isn't ranked the most powerful person in the country. Scott Morrison comes in at number 2, while the Premiers, as a group, that's New South Wales' Gladys Berejiklian, Victoria's Daniel Andrews, Queensland's Anastasia Palaszczuk, and West Australia's Mark McGowan, combined take the top spot.
Running through some of the other stories around today, Rio Tinto, one of the world's largest mining companies, wants to start processing minerals in North America that are considered key to US national security. Mining copper produces mineral-rich waste which can be used from missiles to wind turbines, and Rio basically wants to take advantage of that.
Staying in the exploration sector, ASX-listed Core Lithium will develop the Northern Territory's first lithium mine, less than 100 kilometres from Darwin. It will be Australia's 8th lithium mine, though 2 of those aren't operating at the moment, and the company hopes to be selling the metal by the end of next year.
Now, explosives group Orica's share price jumped 14% after providing upbeat commentary on its ammonium nitrate business. The company, which provides explosives to miners, including the coal companies, has been hit hard by COVID and bans from China on Australian coal exports, and its share price is down 40% since the beginning of the pandemic.
Those shareholders will be very happy with that 14% jump yesterday. Finally, Michael, federal coalition MPs want to introduce a new bill that will cap the pay of telco executives, including Telstra boss Andy Penn, unless service levels improve. The 17 MPs say telcos need to be more accountable. I'm not sure about that one. I think it's pretty rough to actually pay a CEO based on whether the company's doing a good job or not.
You clearly have good service at your household, Sean.
Clearly.
Now, what's the key overseas news this morning?
Well, China's factory output fell in September. That's the first drop since the pandemic began last year. It shows the damage the power outages across China are having on the world's second largest economy, which, as we know, is already slowing. The good news is that away from the factories, the construction and services sectors in China are picking up. Also, Joe Biden and congressional Democrats are negotiating 2 very important pieces of legislation at the moment, which the US president needs to get his reform agenda through and will have flow-on effects throughout the global economy, including Australia. One is his $1.2 trillion bipartisan infrastructure bill, and the other is a $3.5 trillion investment in American social safety net. And COVID-19 has picked up again in the United Kingdom, with cases up more than 1/5 as school children pass on the infection to parents. There are currently around 58,000 new cases every day in the UK.
All right, up next is the Daily Interview, and this morning you're talking to Christiane Rader from Cardinia Capital about the stocks to watch as the economy emerges from lockdown.
I really enjoyed this discussion with Christiane. We went through 6 or 7 different sectors. He told me what he thought of them and the stocks he liked. Well worth a listen.
Yeah, absolutely. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you, Sean.
Have a great day, Michael.
It's Friday, the 1st of October, 2021. Make sure you're following the podcast. Join us online on LinkedIn, Twitter and Facebook, and sign up for our free daily newsletter at fearandgreed.com.au. I'm Michael Thompson, and that was Fear and Greed. Have a great day.